All right, hello everyone. So let's do a weekly wrap up and see how we're going. Now, remember, this week we did the euro dollar. We were following up Bitcoin, but let's first take a look at what we were doing. In fact, let's first take a look at gold as usual, right? So I'll open that up and we'll take a look at how things panned out. Now, I'm also using the Cycle Edge software, which is giving us timing. So we're all honky-dory on that. And we're going to see again how timing just worked wonders. So let's take a look at how things worked out for us. I'm just going to make this a little bigger so you guys can see. All right, so this is for the week of 15th to 19th. Trade swing days: gold, euro dollar, Bitcoin, SP 500, Dow Jones, Nasdaq. You can just take a screenshot. Vector days, what I was expecting, and intraday trade timing windows. Obviously UTC +3 is my time zone. That's your Monday, Tuesday, Wednesday, Thursday, Friday. Okay, Friday I'm not working, so there's no video on there, but let's take a look at the swing days first and let's do it. So gold, we had a Wednesday or Thursday. All right, there's your Wednesday. Let's get rid of that. That's your Wednesday, Thursday coming down. Okay. Now, we did say we should be going up or down here, so it was a bit tricky. I didn't take gold. We did the euro dollar instead. Why? Because I said the market should do two things. We're either going to, close gap here or close gap there. Obviously, ideally, it would have been like close gap there and then sell off because the market's going down. And remember, we want to do an ABC. So I want to come down a little bit more, obviously. All right. But that was how it is. So Wednesday or Thursday, Wednesday market goes down. I did say be careful on the Thursday because it might also go up on Thursday. But what could you have done on Thursday? These are the trading hours. All right. So let's first take a look at Wednesday. It was a trading trade day. Market goes up into a trading hour. We're off a little bit here, as you can see. Market makes a spike up. Let's get rid of that. And then it just slams down. All right. We're a bit off on that one, but it did slam to the downside afterwards. And then here's another trading hour, which went up. And look what happens on Thursday after trading hours. Market comes into a trading hour. I talked about this as well. Remember the 37.5, one of our favorite. Yeah, 37.5. At a trading hour, you should short that down. All right, because that's the impulse 37.5 push to the downside. And look where the market comes down to, all the way into that trading hour. Okay, now if you bought here, if you said to yourself, I'm going to buy here because, all right, because I'm thinking we should go up in order to close here, that's fine. That's not a mistake. This is your zone. This is your trade hour. So, okay, so you would have entered in this zone. Look just what's happening here. If you entered in this zone, right, your stop loss would have been just under that bar there. So you only had literally one bar stop loss. If you got stopped out, that's fine. It's part of the game. Okay. And that's how it is. If you boxed it and you went in with a breakout, your stop loss would have been under there. Then you would have been stopped out here, but that's fine. Being wrong is okay. With timing, your risk is minimal. Okay. But if you did the 37.5 and you sold, you did a whopper day, because remember I did a video and I said on the cycle edge, we've got cycles ending on the 19th, right? So once that starts to push down, then the 19th is a Friday. Market comes into Friday. Okay? And that's how it is. On Friday, was that a trade day? No, that wasn't a trade day, but is that a trade hour? Let's take a look. Because I didn't put in hours for Friday. I had, what's that, 815? I didn't have an 815. I had a 540, which is right there, guys, where the market breaks down. I had a 1030, 1045, which is probably this one. 1030, 1045 is that one. 1045, 1030 is there. So market goes up a little bit, comes down, then 140 to 230. 140 is 140, 230 is 230 is there. So if you bought here, you would have been okay as well. All right. So as you can see, market breaking up and down at the right time and place. Now let's first take a look at also after this gold thingy mob. Let's do, I've got an idea. All right, let's take a look at cycle edge. So I've got gold here. I opened up gold. All right. So let's see on the Wednesday. On the Wednesday, it said don't do anything. On Thursday, what do we have? We had 5:12, 3 o'clock. Let's take a look at that. That's your 5 o'clock right there. Okay, 5:15 in fact, you can see, right? Then we had 3 o'clock, and then we had 4:43. 3 o'clock is, see, that we didn't have. That one I had, but we didn't have. That's your 3:43 market booming down. Okay. So oops, not this one. So cycle edge actually gave us better option. That's 3 o'clock. Look. So it didn't have this and this. It just had 3 o'clock here. All right, just 3 o'clock there. Okay, so the market moved up, and that was, it didn't have this one either. So cycle edge gave me that, and then it gave me, that's 3 o'clock, 4:43, 4:43, 4:43 is right, that one, guys. Boom, down. And then 9:45. So this is strictly for gold. All right, 9:45 gold. Where are you? 9:45. Well, that's your 9:45. 15 minutes later, that's the low pretty much of the day. All right, good to know. Friday, let's take a look at Friday. It's a routine day. As you can see, these are grade C. Okay, so it's like not the best. 217. 217. Okay, so 217. That's your 215 there. So the market just breaking down. Okay, and then the other hour was 7:32. Which, because I think New York was partially closed or something, right? 7:32 is here. So if the market is moving up here, so if the market was open, we'd probably maybe go up. Okay, so it's good to see cycle edge software trade hours. Nice. And with respect to, let's take a look at the days, right? You can see it's giving me Tuesday. Okay, structurally volatile. Let's take a look at Tuesday. Let's go into Tuesday. All right, so Tuesday was a sideways thing. Okay, structurally volatile. Wednesday happened. Okay, so we're a bit day off over there. Okay, and that's it. So that was a sideways market. All right, could that be due to the time difference? I will check it out. Okay, and on Tuesday you see we have a drain day. What does that mean? A drain day is normally a sideways market. Okay, it's like lacking energy and to the downside because like the energy is drained. All right, and here we've got peak. Peak doesn't mean necessarily the top. Peak means like there's a peak move, there's a push, drive. Okay, so, and the routine is just a routine. It's a routine day. Whatever the trend is, whatever the direction is, you can just follow that through. All right, so that's that. Let's take a look at euro dollar, because euro dollar is the one we did this week. Remember, I said I'm going to start opening trades now with the cycle edge, because, I want to, like, we're in testing mode now, right? So what we're doing, we're already doing timing for years, but want to make sure that the software is in sync with what I want to do. So euro dollar, let's do that now. Now I'm going to change this to euro dollar. I'm going to just take the same week and generate a full report. Now with the euro dollar, remember we've got trade day. I said Monday and Wednesday. For the vector days, I said Monday, Tuesday, drain days, Wednesday, Thursday, peak, Friday, routine. All right, so Wednesday it was at a peak and then it did the move all the way down. And for euro dollar, we said Monday and Wednesday. Euro dollar, Monday, Wednesday, peak, Thursday, Friday, routine. So let's see. Euro dollar. Okay, so Monday to Wednesday, that's your Wednesday. All right, we're the peak. And then that is the sell-off. Okay, Wednesday, we're the trade day. So I said if the time is right, the price is right, the day is right. So we go down, and you will note that I put a stop loss there. Okay, so somewhere around there anyway. Okay, so we had a stop loss right at the low here. We said we should get in here, and the market did get in there. Okay, and then they bought. So if you followed that trade, you should have been okay. So if I now take a look at cycle edge, Monday, vector day. So this is Monday, right? That's your Monday. You see, Monday we're at the peaks. Okay, like I said, peak doesn't necessarily mean a top. It could be a top push or a bottom low. Okay, but we're like at peaks, like ends. So new cycle formation momentum starting on a Monday. So that's good to know. We've got trend exhaustion, institutional correction. That's good. Cycle vector, peak, primary cycle vector, and cycle vector peak. Again, 2 cycle vector peaks on this day. So we're like, okay, so Monday is good. And then we've got a suppressed phase. So the market is at a place where it's suppressed. And then we've got grade A trades at 556, 944. That is 944. 447, 1053. So 556. Let's take a look at Monday. Now remember, Monday I gave specific hours overall. Okay, but what we're doing with this is I'm also just checking what's going on with cycle edge. So 556, this is your 556 happening. That's your 6 o'clock market going up after a pullback. So that's nice. And then I've got 944, 447. So 944 is there. Market going up a little bit. And then we've got 447. That's your 447. Market coming down. Okay. And then I've got 1053. 1053. So that's your 1053. Okay, nice and easy. All right, up, down, up, down. You see the moves at the trade hours. Obviously, these hours you'd be selling, right? Why? Because we want to sell the tops, remember? Remember, I drew that rectangle here. So watch the videos, and that's it. Tuesday, this is how it is on a Tuesday. Once again, let's check the hours. 8 to 16, 8:30, 8 a.m., This is 8 a.m. Whoops. Then we have 2:15, 8:30. 8:30, let me just put here. Oh my God, 8:30, this is where the market drops. Okay, 2:15, 2:15. So you see that's down, up, and we're here. We haven't gone below 2:15, and then bang, crash. All right, so on top of the mundane hours that I just gave regularly, overall hours, that's how it is. So let's take a look at, was that a Tuesday? Or that was a Wednesday. So crap. 8 o'clock. Will that work? It'll work. That's your 8 o'clock market going up. That's bizarre. 2:15. Oh, what am I thinking? Oh, that's your 2:15 market going down. That's better. And then we've got an 8:30. 8:30. There. All right. That's it. So Wednesday, let's take a look at Wednesday hours now. 11 and 11:30. So let's take a look at 11. Where's 11? Yeah, this is the time when we took the trade. 11. Remember? Remember 11 o'clock, 10:45, 10:30, 11? Because on the mundane, on Wednesday, we had 10:40 to 11, remember? And that was your 10:40 to 11. Market broke down. Remember, this is where we sold off. Okay? And then market going all the way into... This is just nuts. 11:30 is just so precise. That's weird, isn't it? It really is weird. 11:30, there we are. Just crashing down. Wow. Okay, and that's it. That's Thursday, Friday. You can check them out, see how that panned out. Okay. Let's take a look at Bitcoin. With Bitcoin, my calculations were Thursday. Let's see what this guy said. Cycle Edge. Mind you, Cycle Edge is still me because it's my calculations. But the beauty with the Cycle Edge is this is asset specific. So you can use the overall hours, for example, to check with the Cycle Edge. I'm going to start putting Cycle Edge screenshots in the members area for every asset, right? In advance, like 2 weeks in advance, so you'll be able to see everything happening anyway. So let's see what happened. So let's first get rid of that. Let's take a look at the daily. Right, so that's like Friday, yeah? No, that's Saturday. That's Saturday, Friday, Thursday, Wednesday, Tuesday, Monday, right? So here we are. And we had a Thursday. And in fact, I'd rectangled this in, didn't I? All right. Okay, and I did say the market is still pushing to the downside, so be careful. But let's take a look, right? Even if we traded wrong, what would have happened? On Monday, new cycle formation, momentum starts. All right. The grade A trades for the day, 450, 1055. So let's take a look at 450, 1055 on a Monday, right? Monday. Here we are. All right, Monday, 450, 1055. This is 445. So once this bar finishes, market goes up. And then 1050, was it? And then we had 1040, 1050 on there. 1050, I think, yeah? Yeah, 1053. All right, so those were the grade A hours. What about the grade C? Let's see how they panned out. 6 a.m. 9:45. 6 a.m. is there. All right, market, whoops, market pushing up. 6 a.m. 9:45. 9:45 here. The market just sizzling down a little bit. Okay, so their grade C, as you can see, the grading is pretty good. All right, so we can you see the market just reversing, pushing or breaking down. Okay, so we're either going to get a breakout or a reversal. But the important thing for this one, right, you can check Wednesday. You can see Wednesday, no schedule signals. Thursday, it's got, so we had no orange day, and this is Thursday, grade A, 257, 9:45. So you can check the Tuesday hours as well. Shall we do it? Okay, let's do it. Tuesday, let's do Tuesday. So Wednesday it told us to chill out. Grade A, 8 a.m. Tuesday, 8 a.m. That's your Tuesday, 8 a.m. guys. Beautiful. And if that's not good trade, if that's not good timing, I don't know what is. What about 8 p.m.? 8 p.m. is there. Okay, so the market just going up a little bit and then sideways. Okay, 8 p.m. Sorry, 8:30. But look, that 8:30 is grade C. It's not like the kind of trade you want to take. But if you did take it, it's 8:30. Market goes up. I guess that's just scalping. Okay, if you just need to take grade A trades. Take grade A and, you have a better risk return. You're more chilled out. Wednesday, we were off on that one. Nothing to do. Thursday, what is it? It's a flow day. What does that mean? Whatever happened on Wednesday, we follow that day. All right, so that's your Wednesday. So we got to follow, all right, that Thursday. All right, so Wednesday was what was it? Wait a second. Wednesday was a trade day, right? So what we have to do is go with the flow off Wednesday. We didn't have anything on Wednesday, but we can look what happened on Wednesday. So Wednesday, market crashed down. Okay, so Thursday, we're going to have a flow day. And on a flow day, we want to trade at those hours. So let's check them out. Now these hours are according to, I think, the overall hours I gave, but let's check out what Cycle Edge gave us. Grade A, 3 p.m., 9:45. 3 p.m. That's your 3 p.m. there, okay? So 3 p.m. market goes up. If you entered long here because the market was low, so if you were going to enter at this trade hour here, you would have gone up, okay? You still would have covered the trade because the trade is 1 bar stop loss, okay, especially with something like that. But these are the overall hours I gave. So the overall hours, as you can see, pretty much pinpointing all the turns. And I did a video on this here and I said, what do you think is going to happen? We have an impulse wave and a runner. What does that mean, runner? If you know technical analysis, you know what a runner is. Trade hour at the top of the channel and it's just going down. All right, so that's that. Friday, looks like we've got a sideways market. Did it give us anything for Friday? It's a routine day. And that's it. just a routine day on a Friday, standard day. No intraday trade hour windows. Regime is continuation. No shifts detected. So this kind of information is obviously, right, it's like rely on broader trend. So what would that be for us on a Friday? Well, on a Friday, if I did want to trade 220, 730, let's take a look at 220. $220 here. All right, nothing much. So regular day, and 7:30 in the evening. 7:30, market falls down. Okay, and that's basically it. So overall, if you take a look at the day, this is your daily insight, right? So on your daily insight, let's move this here. I hope you guys can see better, right? This is the daily insight. Why don't I just make me smaller? So you got the daily insight. It's telling you, listen, suitable for intraday scalping triggers. So don't do anything like swing trading on this day. Okay, it's telling you not to. And that's basically it. If you want to trade, these are the good hours to trade, but you understand you better be scalping. Okay. This is Saturday. Quiet day, is it? So far, it's like an up day. All right. Now, I did say, remember in the video, Thursday can be a trade day at the end of the day. And look at that. That's a trade day at the end of the day. All right, it's a Friday, Saturday going up. All right, so Friday, that was it. On the Friday, were there mundane aspects where we could have bought where it bounced up on Thursday, right? So let's check it out. On the mundane hours, overall, we had what? 540. This is 540 pushing the market down into support, and 1030, 1045, 1030. This is 1045. Okay, market picking up. What's the other hour I've got? 140 to 230. Oh, here we are. This is the spot. 140, guys. 140 to 230. This is where you would have bought. All right, why? Because the market's bouncing up from the same place. At the trade hour, we're at the same spot. If you bought on that bar, stop loss would have been just under there. And that's it. And then what? I've got 540, 10 past 6. 540. This is your 540, guys. And your 10 past 6 is obviously going to be there. All right, so that's your 540. That's your 545. 6 o'clock is there. And then what do I have? I've got 9 to 9:45. 10 past 9. 10 past 9 to 9:45. 10 past 9. And this is 9:45. Market to the upside. Okay. Now, I don't do Saturday hours, but Edge does. So let's check out the Edge. Oh, look. Grade A trade. Steady push. Oh, I like this. Vector days routine. Phase steady push. What time? 8:59. Oh, 8:59. We're a little early. Oh, we've got 8 here, my time. Trade hour 8:58, and we've got a steady push day. 8:58 is here. So if the market comes kind of like pulls back, you want to have a steady push to the upside, you can. Okay, so knowing that in advance is good. So it's a steady push day. Grade A is at 9 o'clock. 9 o'clock. Yeah, there. All right, see how that pans out. And that's it. So it's a good thing that edge gives us the weekends because I specifically wanted it to do that for the weekend traders. Other than that, this is the weekly insight. If I do grade A only, let's see, today's the 20th. Do I have anything for the 20th? No, but I got a bunch of 19 cycles ending up, all right, on the 19th. So it's not a wonder, because I got 19, 19, 19. The cycles are ending. So if it ends, it's going to stop somewhere, okay? It's not necessarily giving me a reversal, but it is stopping there, okay? And also, you see the Thursday 18 here? Thursday 18 is peaking out, all right, which is like important. Why? Because that peak out here, when it says peak on the swing day periods, that's like, that's the day I'm just gonna like do the top or the bottom. And this is why I said in the video, for Thursday we could do the swing at the end of the day. So happens at the end of the day, and you can trade it in Asia session when you look for an opportunity on a retracement, or if there's a good price level at the end of Thursday, at the end of the day, that's still fine to do as well. All right, so there we go. So looking at the cycle days as well is all good. What about the month? Let's take a look at the grade A for the month. Saturday 23rd of May, 1 July. It's going to peak out on the 1st of July. Okay, let's see what happened on the 23rd of May. All right, so it's telling me that was a cycle start, which is going to peak out on the 1st of July. So 23rd of May. Let's go to the 23rd of May. Oh, this is the 23rd of May. We took a look at this before. All right, there you go, guys. 23rd of May, market, cycle starting. Okay, so we still have a bit of room to go. So if we go up, the market will probably want to sell. Or if we end up somewhere on the 1st of July on Wednesday, somewhere high, then you want to sell into 10th of August. All right, so it should be like, the cycle should like follow through. So these are all good to know, and that's basically it. Anything else you guys want to take a look at, just compare them. This cycle edge, I've put everything in there that we trade. So overall, the six things we look at are all going to be here, like gold, indices, euro, dollar, Bitcoin. So it's all good. It's all in there, no problemo. And I'll be putting that up as at the 1st of July. All right, I'll also, because I'm putting more information, what I'm going to do, I'm going to make sure everybody can see everything, okay? We're going to have monthly and quarterly membership, and that's it, okay? I'm going to put the price up as well as we get to July. If you're a previous member, you still go with the old price, okay? So no problems there. You just continue with the old price. The new price is just going to be for the new members. But we're going to use this. Plus, I will still give the overall hours as well. Okay, and I've done a software for that one. But that's like, it's only for those who took the timing course. All right, because then you know what's going on. Otherwise, it's going to blow your mind. You won't be able to use it at all. This is like in its simplest form. You just slap in a few numbers and it does all the calculations in the background for us. It does like a 15 tab matrix. So we calculate a bunch of stuff there and then it'll just give us out. So this is why it's coming out with all the comments as well. Okay. Every comment, think of every comment is a calculation. Okay, so every comment is a specific calculation. According to that calculation, that's what we're expecting. With the short term, mid-term, long term, intraday, and all that kind of stuff, it's like full on. All right. There we go. All right, you guys have a good weekend. That was the weekly wrap up, and see you guys next week. Next week on Monday probably. I'm going off to the summer house. On Monday I will try to do a video before I go. Okay, but just in case, if you write to me and I'm not answering, you know I'm on the road. And on Tuesday when we get there, I'll get there on Monday evening. On Tuesday I'll set up all the screens and stuff, so we should be up and running again on Tuesday. That'll be a good opportunity as well, because I'm going to put some trades in while I'm on holiday. And why we can do that is because we know the trading days, the trading hours, and anticipated pricing. All right, have a good weekend.